there clearly has been concern about weakening yen, and obviously with all the developments that have taken place in the U.S. in the past 48 hours and the significant repricing of both the 2-year and the 10-year, that the spread that Will was mentioning between U.S. and Japan certainly takes some of the pressure off Governor Kuroda in terms of yield curve control, which clearly is going to be maintained. So it's probably not surprising that, given how far the yen had extended and given that compression in yield spread, that takes things down somewhat. Our broader view in the market, just quickly, is that we're constructive. We think that the valuations have really compressed very, very significantly. Japan's trading 12 and a half times earnings. That's really at the low end of its range. Foreigners have been net sold a lot. Earnings delivery has actually been pretty good. We're getting into a very, very significant part of the earnings result season, both today and also next Thursday and Friday. 52% cumulatively of the market will have reported at that point. So obviously we'll be looking at the guidance there. But broadly speaking, we think that there's a pretty constructive setup here. And it's also, we would note, very fertile for bottom-up stock picking, given a lot of the micro developments that are taking place in terms of improving corporate profitability.
Well, we'll get into the bottom-up stock picking in a minute, Tim, but let's just stick with the macro for a second, because, some of these events, like the yield curve control and the way that the Japanese government is handling the economy, in a way is sort of noise on top of what they're trying to do. I mean, there's a lot of interference going on there. But in terms of the long-term prospects for Japan's economy, as you have been watching for the past 25 odd years, the desire to have inflation has been, the holy grail of Japan's economic policymakers. Are we in a position where finally they're getting their hands on that grail?
Well, it sort of looks like they're closer to grasping it than before, to extend your metaphor. I mean, we've just seen a print that we've seen a mild increase in Japan's CPI to just above 2%. I guess the jury's still out as far as how long-lasting that will be, if it's transitory or not. But globally, there's obviously huge inflation pressure. Japan is sharing some of that and experiencing some of that, and that obviously has been something that the government has been, and the policymakers have been very much trying to encourage for, as you said, more than 2 decades. So to the extent that that can happen, then that's going to get potentially Japan out of its long-standing deflationary pressures, which overall would be constructive.